Every year at this time, investors ask a common question. Are stocks a good buy in January? It's the so-called January effect that says stocks go up at the beginning of the year because investors want to start buying again. So which names tend to do well? Morgan Brennan digs through the data.
Forget those New Year's resolutions to quit smoking or eat healthier. How about one for your investment portfolio? A stock detox. Over the past decade, certain names have tended to pop in the first 2 weeks of a new calendar year. According to data from market analytics firm Kensho, those stocks have overwhelmingly been medical device makers. Stryker has averaged a 5% gain, Zimmer Holdings and Edwards Life Sciences 3% apiece. 2014 was good to this healthcare industry, and analysts expect that to continue in 2015.
Next year, I think it's going to continue to be about M&A. We're going to have 3 deals closing in the first quarter, so that will really now change it from the hopes of what could happen with M&A to really putting some numbers down in the record and really executing on a lot of the plans on the integration side and really starting to see the benefits of these mergers come together.
Medical device makers may be worth a look, but think twice about certain retailers. According to past performance, at least, GameStop, L Brands, and Kohl's have all tended to slump in early January, thanks in part, say analysts, to holiday sales data. Telecom companies also tend to fare poorly at the start of a new year. CenturyLink has tumbled 3% on average over the past decade, while Frontier Communications and AT&T usually fall 3% as well. But keep in mind, how stocks fare in January doesn't always serve as a good indicator for the rest of the year, contrary to the so-called January barometer theory. This year, the S&P 500 slid lower in the first month, but it's ending 2014 12% higher. For Nightly Business Report, I'm Morgan Brennan, wishing everyone a Happy New Year from the NASDAQ in New York City.